So here's the key thing about Bitcoin. To me, it's a matter of time it gets to 100,000. The key fact is buy code, supply is going down. Can't change it. Adoption and demand are increasing. Unless you expect that to reverse, which I don't, I think it's going to accelerate. Every sign I see is it's accelerating. It will continue to appreciate. It's just a matter of time. Right now, I think it's at that point where it's getting to very low prices. We should look back from the future as a very low price, like we looked back at the NASDAQ from the bottom in 2002.
Hey guys, welcome back to Library of Wealth. Today we have senior commodity strategist Mike McGlone. McGlone believes that the second half of 2022 will resume with a bull market in crypto and that Bitcoin is likely to become a risk-off asset in the near future. He advises that it is imperative that people consider the reason why Bitcoin has decreased in the first place, and goes on to point out that the market has undergone one of the biggest corrections in the stock and bond market in over 40 years. As an impending global recession looms on the horizon, Bitcoin remains a strong indicator of what is going on in world markets. Let's listen to this interview with Mike McGlone as he gives his take on Bitcoin and his prediction for a strong bull market at the end of 2022. Don't forget to like and subscribe if you like what we do here on this channel. Let's get right into the video.
I think the key thing to realize here, it's got a pretty good pump with all the publicity, and it's risking a significant reversion back towards $1,000. I think the big picture to think about with Ethereum is it's revolutionary. Just like I came from the futures pits and they revolutionized finance, it's revolutionizing finance like futures and ETFs. But right now we get through this merge, and now we have to worry about potential bumps in the road, which we all know happens with this kind of technology. And remember, I'm a markets guy, the technology guy. I depend on other technology stuff. I depend on other people for it. But the thing is now, then we have to turn over to the macro big picture. What's been pressuring cryptos this year? And that is the Fed sledgehammer. And I think that's my focus. I mean, I've written about Ethereum and just kind of lighten up a little bit with all this merge talk, because I'm just afraid it got too hyped, and now we got, okay, now let's do it. And I'm worried about the short-term pain for a longer-term gain in all markets. Definitely a lot of the good news priced in for the short term, but it's within a significant macroeconomic, broad-based bear market for all risk assets. I mean, even housing markets turning over. Even bonds are down. It's that macro, and it actually might be one of the biggest bear markets in most of our lifetimes. And I'm almost 60 years old. And I think it's just early days, because I've never seen this before, Michelle. We have that much aggression from the Federal Reserve, and within a market, a global economy that's really tilting significantly towards recession. I mean, we have a Bloomberg economics tracker that's pretty seriously a good indicator in 2008. It's gone negative for a global economics tracker. So that's the macro. You dig into the cryptos, and I think what's happening is, what's really happened this year is the markets realize that this Bitcoin thing is one of the world's most significant leading real-time 24/7 traded leading indicators. It's just indisputable now. I mean, it come Friday happy hour, that's when you really see it. And Saturday, you see what's going on. And Sunday, you see what's going on. And it's signaling risk off in one of the most significant risk off markets I've ever seen. I think we're going to see more of that, but I think it's going to come out ahead. Bitcoin particularly, because I think Bitcoin's going to be trade more like U.S. long bonds and gold, which had a problem today, which is indicative of the problem. And Ethereum's so revolutionary because one thing that's most notable, I like to point about Ethereum, it's making the most significant thing happen that I just find revolutionary, and that is the tokenization of assets. Most notably, the most widely traded crypto on the planet, our tokens, are dollars. Ethereum made that happen. Yes, there's competitors, but Ethereum was the leader. Tether's one of them. There's a dozen crypto dollar wannabes. People call them stablecoins, but people are realizing how revolutionary this technology is. And they all know, most people realize, okay, I've got to adopt or fall behind. Now, what does that mean for the price of Ether? Okay, might go back to 1,000, might even get a bit lower. And I think in the next 5-10 years, it's going to go much higher. But right now, the key thing for all cryptos is they're about $1 trillion space. The global equity market's $100 trillion. It's already lost 20. It's probably going to lose another 20. And I don't see what stops that right now. That's the problem. Is this Fed sledgehammer is revolutionary. It's that's unique in the midst of a global economy that's tilting towards recession. So to me, that's how macro is. But you look at this 5 or 10 years from now, and that's where I think cryptos are going to really make the difference, but I view it as like the year 2000 and the internet bubbles just starting to roll over.
McGlone believes that people have seen that the Fed has become increasingly aggressive with a high pace of increased points. The intense increase has created what McGlone refers to as the Great Reversion. This Great Reversion has created a significant correction in the stock market. Because cryptos are such an accurate indicator, they are the lead in a race of what McGlone refers to as a pendulum of risk assets that has swung too far one way and is now swinging back.
Seen this. The Fed will not be easing anytime soon, and it's classic human nature because now we have the benefit of knowing how far and the mistakes they made by easing too much. So that's the key thing I like to say. Looking in the rearview mirror, it's very clear the pendulum for risk assets swung way too far to one side. And looking forward into the front of where this car is going, it's very clear that pendulum is going to be swinging back significantly the other way. The Fed is a leading part of that, but it's just not going to happen that they're going to ease like they did during the 87 crash and during just when we plunged in 2018, and most significantly when we plunged in Q1 2020, because they know now they are somewhat responsible for this massive inflation. It's the key things I like to come back to, and cryptos are a leading indicator here. When it gets this macro, you have to go to the key rules of macroeconomics. Number one, inflation is always a monetary phenomenon from Milton Friedman. And number two, the Adam Smith rule of the invisible hand. And to me, that invisible hand is just kicking in massively, where you throw money at people, they buy too much, they extend, and now it's all going back the other way. So that's the key thing about cryptos. It was the most speculative leading indicator I've ever seen. It still is. I mean, on your phone, this stuff trades 24/7 globally, fluently, and it's really, it's revolutionizing how people can get access to other currencies than their melting currencies, like certainly the dollar and Bitcoin. But now it's going towards, okay, we've gone too far. 2000 we did, and then we dropped, and it took 13, 14 years to get back above that old high in equities. I see a similar case. This is 1929 and the Fed's tightening. It's very much happening that way. Look at things like crude oil. We just have the biggest pump in crude oil versus this 100-week moving average ever, crude oil futures. And now it's reverting. And what typically does is the pendulum swings back too far. And I think we're in the early days of that. So I don't think they're going to get too cheap, but I think what's the bigger thing is when the dust settles from this, because the Fed's not going to be easing anytime soon. That number one way to stop the Fed from easing is markets have to go down, unfortunately. Otherwise, they're just going to hang out and wait until that inflation goes down. And what's the best way to make inflation go down? Markets have to go down. Cryptos are just a small part of that. But that's why I think the macro is overwhelming. And I think it's, when I see a storm coming, I think it's somewhat my duty to warn people. And just telling this is my true feelings of what's happening. I ask people, and I'll ask you this, and even our listeners, what stops this? Is it going to be the Fed? Is it going to be a stronger dollar? Does the dollar has to reverse? No. Is it going to be global economy coming out of it? No. Is it going to be China coming out of it? It's very unlikely. I don't see what stops it at the moment other than risk assets going lower and reaching a lower plateau and us resetting.
McGlone believes that Bitcoin is in a process of recovery as commodities will begin to crash. He points out that copper and lumber have declined tremendously and that the impending global recession will be severe and will ultimately cause Bitcoin to shine. Even though McGlone holds Bitcoin in high esteem and in the lead of the coming bull run, he stresses that it is imperative that people consider holding more than one crypto in their portfolio. As markets fluctuate and the world economy changes, having a diversity in cryptocurrency allows for flexibility in considering who the next winners will be. What do you guys think about Mike McGlone's opinion that the second half of 2022 is going to be one of the greatest bull runs in Bitcoin history? Let us know in the comments below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.